Sayın Sermaye Piyasası Kurulu Başkanım, Sayın Türkiye Sermaye Piyasaları Birliği Başkanım, Sayın Takas Bank Genel Müdürüm, sermaye piyasalarının değerli temsilcileri, değerli basın mensupları ve tüm misafirlerimiz, TKYD 3. Portföy Yönetim Zirvesi'ne hoş geldiniz. Hepinizi Türkiye Kurumsal Yatırımcı Yöneticileri Derneği adına sevgi ve saygıyla selamlıyorum. Hepinize günaydınlar. Bu sene üçüncüsünü düzenlediğimiz ve geleneksel hale gelen zirvemizde gün içinde panellerimiz olacak ama açılış konuşmaları ardından çok değerli bir isim gelecek buraya. BNP Paribas Portföy Yönetimi Baş Stratejisti Daniel Morris'i sahnemizde ağırlıyor olacağız. Kendisi hem konuşmasını hem de sunumunu yapacak. Ardından 4 tane panelimiz var. Bu panellerimizde de çok değerli panelistlerimiz konuşmacı olarak sahneye gelecekler. Yaklaşık olarak saat 16:30 civarında zirvemizi tamamlamış olacağız. Ben lafı daha fazla uzatmayayım ve açılış konuşmasını yapmak için o güzel enerji dolu alkışlarınızla sahneye TKYD Başkanı Sayın Yagiz Oral'ı davet edeyim.
Sermaye Piyasası Kurulu Başkanım, Sayın Türkiye Sermaye Piyasaları Birliği Başkanım, Sayın Takas Bank Genel Müdürüm, değerli meslektaşlarım, saygıdeğer konuklar, Türkiye Kurumsal Yatırımcı Yöneticileri Derneği olarak bu yıl üçüncüsünü gerçekleştirdiğimiz Portföy Yönetimi Zirvesi'ne katılım sağlayan siz değerli misafirlerimizi saygıyla selamlıyorum. Bu yıl Cumhuriyetimizin 100. yılını büyük bir heyecanla, gururla ve coşkuyla kutluyoruz. Cumhuriyetimizin 2. yüzyılının güçlü sanayi, yatırım ve üretimin öne çıkacağı, teknolojik altyapı ile dijital dönüşüme öncülük edileceği, sürdürülebilirliğin ana eksenini oluşturan çevresel, sosyal, kurumsal yönetişim konularında önemli etkilerin yaratılacağı bir yüzyıl olacağını bugünden görmekteyiz. Bu gelişim içerisinde en önemli rollerden birini kuşkusuz sermaye piyasalarının ve dolayısıyla portföy yönetimi şirketlerinin oynayacağına inanıyoruz. Değerli konuklar, ülkemizde portföy yönetim şirketlerinin kurulmaya başlaması ve Türkiye Kurumsal Yatırımcı Yöneticileri Derneği'nin kuruluşu 1990'lı yılların sonuna denk gelmektedir. Sektörümüz geride bıraktığımız 25 yıllık süreçte yatırım fonları alanında farkındalığın artırılması ve kurumsal yatırımcı tabanının büyümesine katkıda bulunurken, sağladığı finansman ile beraber ülkemizin sürdürülebilir kalkınmasında ve şirketlerin gelişiminde önemli rol üstlenmiştir ve bunu da sürdürmeye devam edecektir. Portföy yönetimi şirketleri tarafından yönetilen büyüklük, 2023 yılında önemli bir artış göstererek 3 trilyon lira limitini de geride bırakmıştır. Bu büyüklük gayri safi yurt içi hasılamızın %13.1'ine tekabül etmektedir. Bu hızlı artışa rağmen yatırım fonlarının yatırımcı sayısının 4.3 milyon civarında seyrettiğini gözlemledik. Sektörümüzün son yıllarda sergilediği etkileyici büyüme ile geldiği bu noktayı çok önemsiyoruz. Ancak gelişmiş ülke ekonomileri ile kıyasladığımızda gidecek daha çok yolun olduğunu da görüyoruz. TKYD Başkanı olarak yönetim kurulu üyeliğini üstlendiğim Avrupa Fon ve Varlık Yönetimi Birliği EFAMA'nın raporlarına bakacak olursak, Avrupa Portföy Yönetimi Sektörü 28,5 trilyon euro büyüklüğüyle Avrupa gayri safi milli hasılasının %138'i seviyesinde bulunmakta. TKYD olarak bu seviyelere yaklaşmayı hedefleyerek daha gelişmiş ve derinleşmiş sermaye piyasaları ile birlikte ülkemizin finansal istikrarının artmasına ve ekonomimizin gelişmesine katkı vermeye devam edeceğiz. Değerli katılımcılar, kurumsal yatırımcıların reel ekonomiye katkısı hızlı bir şekilde artıyor. Kurumsal yatırımcılar hem şirketlerin pay senetlerine uzun vadeli yatırımlar yapıp hem de girişim sermayesi ve gayrimenkul fonları ile reel sektöre önemli miktarda kaynak aktarmaktadır. Kasım sonu itibariyle GYF ve GSYF fonlarının yaptığı yatırımlar 150 milyar Türk lirasını aşmıştır. Aynı dönemde 382 milyar TL'lik pay senedi yatırımı ve 33 milyar TL'lik özel sektör tahvili yatırımı yapılmıştır. Bu grubun toplam yatırımları 565 milyar TL seviyesini geride bırakmıştır. Kurumsal yatırımcı yöneticileri olarak çok önemli gördüğümüz bir alanda sürdürülebilirlik, çevresel, sosyal ve kurumsal yönetişim ve etki yatırımları. Son yıllarda sürdürülebilirlik yatırımları önemini her sektörde artırmıştır. Türkiye'de yatırım yönetiminde de artan ilgi ile 4 milyar TL büyüklüğünde fon kurulmuştur. Bizler sektör olarak sürdürülebilirlik temasını da en iyi şekilde desteklemeye devam edeceğiz. Üniversite öğrencilerine yatırım fonlarını ve TEFAS'ı tanıtmak ve finansal okuryazarlığı artırmak için Türkiye Sermaye Piyasaları Birliği ve Takasbank İşbirliği ile bu yıl üçüncüsünü düzenlediğimiz Altın Yumurta Üniversiteli Fon Sepetimi yarışmasında sürdürülebilirlik fonlarına yatırım yapılmasını zorunlu hale getirdik. Öğrenciler gün geçtikçe önemi artan sürdürülebilirlik ve etki yatırım temaları ve bu temalara yatırım yapan fonları tanıyacaklar ve bu şekilde daha çevreci yatırımlar yapıp ülkemizin geleceğine katkıda bulunabilecekler. Değerli konuklar, bugün birbirinden değerli panelistlerle beraberiz. İlk olarak BNP Paribas Portföy Yönetimi Baş Stratejisti sevgili Daniel Morris bugün bizlerle beraber. Kendisinden küresel piyasalardaki gelişmeleri ve beklentileri dinleyeceğiz. Panellerimize geleceğin yatırım temalarını konuşarak başlayacağız. Sonrasında alternatif yatırım fonları girişim sermayesi modeli ile ilgili bir panelimiz yer alacak. Ardından küresel ekonomik görünüm, Türkiye'de büyümenin geleceği ve bileşenleri panelimizde Türkiye'deki büyüme ve gelecek beklentilerini ele alacağız. Son olarak da sektörümüzün iş ortakları ile son yıllardaki gelişmeleri değerlendireceğiz. Gelenekselleşen Portföy Yönetimi Zirvesi'nin bu yıl gerçekleşmesinde katkıları olan tüm sponsorlarımıza sizlerin huzurunda bir kez daha teşekkür etmek isterim. TKYD Yönetim Kurulumuz adına 3. Portföy Yönetimi Zirvesi'ni şereflendiren Sermaye Piyasası Kurulu'na, Türkiye Sermaye Piyasaları Birliği'ne, Takasbank'a, sektörümüzün temsilcilerine ve siz değerli konuklarımıza bir kez daha şükranlarımı sunuyor. Zirvemizin herkes için verimli ve keyifli bir şekilde geçmesini diliyorum.
Sayın Yagiz Oral'a konuşması için çok teşekkür ediyorum ve şimdi sahneye çok değerli bir isim davet edeceğim. Sermaye Piyasası Kurulu Başkanı Sayın İbrahim Ömer Gönül geliyor güzel alkışlarınızla konuşmasını yapmak üzere.
Sayın Başkan, değerli genel müdürlerim, kıymetli katılımcılar, sözlerime başlarken zirvenin düzenlenmesinde emeği geçen herkese çok teşekkür ederim. Hepinizi saygıyla selamlıyorum. Kurumsal yatırımcılar, sermayenin tabana yayılmasında önemli bir rol üstlenmektedirler. Sermaye piyasasının derinliğinin artması için yatırım fonlarının büyümesine biliyorsunuz oldukça önem veriyoruz ve bu konudaki çalışmalarımıza devam ediyoruz. Kasım ayı itibariyle menkul kıymet yatırım fonları ve emeklilik yatırım fonlarındaki tasarruf düzeyi 2,1 trilyon lirayı aştı. Ayrıca toplam 64 adet portföy yönetim şirketi tarafından yönetilen toplam portföy büyüklüğü de 3 trilyon lirayı aştı. Yatırım fonlarına yatırım yaparak kurumsal portföy yönetiminin avantajlarından yararlanan yatırımcı sayımız ise 5 milyon civarında bulunuyor. Bu fonların yanında son yıllarda dünyada öne çıkan ve alternatif yatırım fonları olarak adlandırılan girişim sermayesi yatırım fonları ve gayrimenkul yatırım fonları da benzer şekilde önemli gelişmeler kaydetti. 2014 yılından itibaren ülkemiz mevzuatına kazandırılan alternatif yatırım fonlarının yapılan yasal düzenlemeleriyle birlikte bugün 150 milyar lira büyüklüğünü aşmış olması sermaye piyasasına adına sevindirici bir gelişme olarak görüyoruz. Son dönemde belirli temalarla kurulan fonların büyüklüğünde de artış gözlemliyoruz. Kasım ayı itibariyle sürdürülebilirlik temasına yatırım yapan ve temiz enerji gibi yenilenebilir enerji alanlarına odaklanan toplam piyasa değeri yaklaşık 14 milyar lira civarında olan 47 yatırım ve emeklilik fonumuz bulunmaktadır. Bu tutarın önümüzdeki yıllarda dünyadaki konjonktüre göre artacağını da umuyoruz. Menkul kıymet yatırım fonu ve emeklilik yatırım fonu piyasasının gelişiminde önemli rolü olan TEFAS ve BEFAS'ın öneminden de ayrıca bahsetmek istiyorum. 2015 yılından bu yana faaliyette olan TEFAS, 2021 yılından itibaren de faaliyette olan BEFAS, yatırımcıların sadece fonlara erişimini kolaylaştırmakla kalmamış, ayrıca fonların da karşılaştırılmasına sağladıkları kolaylıklarla birlikte yatırımcı tabanının genişlemesine faydalı olmuştur. 2023 yılında TEFAS'ta toplam işlem hacmi 1,7 trilyon lira, BEFAS'ta ise yaklaşık 16,5 milyar liraya ulaşmıştır. Bu gelişmeler fon ekosistemi açısından geleceğe daha umutla bakmamızı sağlamaktadır. Hepimizin takip ettiği üzere kurumsal yatırımcı tabanındaki bu olumlu gelişmeleri dikkate alarak portföy yönetim sektörünün kurumsal kapasitenin güçlendirilmesine yönelik adımları atmaya devam ediyoruz ve devam edeceğiz. Yürütülen çalışmalarımız sonucunda bu yıl portföy yönetim şirketlerinin organizasyonel yapısı ve sermaye açısından güçlendirilmesi amacıyla düzenlemelerimizi yaptık. Bununla birlikte yatırımcıların hak ve menfaatlerinin korunması amacı ve yönetim sürecinde şeffaflığın artırılması amacıyla dünyada stewardship olarak bilinen sorumlu yönetim ilkelerine ilişkin düzenleme çalışmalarımız da devam ediyor. Ayrıca karbon piyasasının geliştirilmesi, sürdürülebilirlik, finansal teknolojiler ve finansal okuryazarlığın yaygınlaştırılması ve bu amaçla yürütülen çalışmalarımızla birlikte kurumsal yatırımcılar sektörüne daha olumlu yansımaları olacağını tahmin ediyoruz. Değerli katılımcılar, kurumsal yatırımcılar, özellikle portföy yöneticileri önemli görev ve sorumluluk üstlenmektedir. Sermaye piyasalarının belki de en sağlam kalelerinden biri olarak gördüğümüz kurumsal yatırımcıların görevlerini bu sorumluluk bilinci altında yaptıklarına inanıyoruz. Mesleki etik dışında davranmayacaklarına inandığımız bu paydaşlarımız, eminiz ki aldıkları sorumluluğun bilincinde olarak en iyi hizmet anlayışıyla görevlerini yerine getirmeye devam edeceklerdir. Portföy yönetimi alanındaki gelişmelerin aktarılmasına vesile olacak bu toplantının organizasyonu için Türkiye Kurumsal Yatırımcı Yöneticileri Derneği'ne teşekkür ediyor. Hepinizi saygıyla selamlıyorum.
Sermaye Piyasası Kurulu Başkanımız Sayın İbrahim Ömer Gönül'e konuşması için çok teşekkür ediyoruz. Ve şimdi sırada ana konuşmacımız var, çok değerli bir isim. Kendisini sahneye davet etmeden önce sizlere birazcık onunla ilgili bilgi vermek istiyorum. Daniel Morris kimdir? Paribas Asset Management'ın baş piyasa stratejisti ve yatırım öngörüleri merkezinin eş başkanı kendisi. Bu görevden önce Daniel, JP Morgan Asset Management'ta küresel piyasa stratejisti, Lombard Street Research'te kıdemli hisse senedi stratejisti ve Bank of America Securities'de ABD hisse senedi stratejisti olarak çalışmış. Pomona College Matematik bölümünde lisans, Pennsylvania Üniversitesi Wharton School'dan MBA derecesinin yanı sıra John Hopkins Üniversitesi'nden Uluslararası Ekonomi ve Latin Amerika çalışmaları alanında yüksek lisans derecesine sahip olan Morris, CFA, Charter Holder aynı zamanda. Alkışlarınızla sahneye davet ediyorum. Daniel Morris. Hello, welcome.
Thank you. Good morning, everyone. Thank you very much for being here. I'm so excited to be in Istanbul. I think it's the most amazing city in the world, so this is a great opportunity. I think Istanbul deserves a round of applause. It is just fascinating. So thrilled to be here, thrilled to be here with you. However, if we have slides coming up, there we go. We're here to talk about next year. And I always want to come with a positive message. And the only reason maybe I won't be quite so positive as I would like to be is because the market just seems so happy these days, right? Any news we get seems to be good news. Even if it's bad economic data, that's good news because it means inflation is lower and the Fed can cut rates. But if it's good economic news, then we're not worried about growth. So from that point of view, and in contrast to the way we felt at the beginning of this year, when we were all quite, I think, negative and depressed and expecting a recession, and things were better than expected, probably at this point anticipate next year will be a little bit worse than the markets anticipate now, but still pretty good. So just a bit of a readjustment of expectations. Hence, our view is that we will have a soft landing in the US, meaning no recession. Inflation will continue to move back towards the central bank's 2% target, but maybe not quite so quickly and so easily as the markets seem to expect right now. So maybe a bit of turbulence, a bit of volatility, which we're quite used to. If that's the outlook for next year, what does it mean for investments? Start with equities. Of course, a soft landing is much better than a recession, but it's also not great. I mean, really, what equities like, or when equities perform the best, is when you've had the recession and now you're recovering, and growth is accelerating and the outlook is improving. Conversely, when you have a recession, clearly that's bad for equities, but it's, in a sense, as an investor, pretty easy, because we know what to do. We know how equities will behave if growth is going negative. Next year is going to be this somewhat odd environment where growth will be positive but slowing. And I think that will be challenging at times for equities, for risk assets, as sentiment, as the market's view of the data changes. The one thing we are pretty sure of for next year is that the economic data is going to get worse. Growth is going to be slower. And at times, as I said earlier, bad news will be good news, because that means we're less worried about inflation. But I think there will be times when the market sees some negative economic data, panics a bit, starts worrying about a recession, and we see a sell-off. From that point of view, then, if we do see perhaps rates go back up again, or worries about a recession causing the markets to fall, given that we do still have a positive view for the year, for us that would be an opportunity to add risk. The other key thing that will hopefully be different next year, normally when we talk about equities, we say the most important thing are corporate profits, earnings, because that's what drives equity prices. Except honestly, over the last 2 years, that's not really been the case. Because we've had this huge adjustment in interest rates over the last 2 years, it's primarily been interest rates that have driven equity markets. Because if you look at earnings, they've been pretty steadily positive. Hopefully next year we'll have a little bit less fixed income volatility, which I imagine we would all like. And if that happens, then earnings should become, again, the most important thing for equity markets. So hopefully going back to earnings being the key driver. Finally, as we've seen with sentiment, as we've seen with interest rates, these huge swings, unexpected swings in interest rates, and we'll talk about what's driven or what drove that increase in Treasury yields. Don't forget, not so long ago we were at 5%. 10-year Treasury yields. Jamie Dimon said they could go to 7%. Here we are below 4%. So talk a bit about what's behind all this volatility in fixed income. Let's start with the moves we've seen, and I want to focus on the green line here, which are real yields, 10-year real yields in the US. And you see that's the one that's really moved the most over the last 6 months or so. And to start with the big sell-off that we don't want to forget occurred over the summer, when we were quite panicked about yields going above 5%, that my view is the reason for that increase, that sell-off then, were worries about fiscal sustainability, about debt levels, about budget deficits in the US. And that hasn't gone away. So we don't want to dismiss those concerns just because yields have come back down. And at some point, I think we will worry again about budget deficits in the US, in Italy, or Japan, now that interest rates are higher. When that might happen, of course, is always the question. Potentially, it could be when we get closer to the US election, if we see one party, either the Republicans or the Democrats, likely to get control of all of government, meaning not just the presidency, but they control Congress. Because when you have one party controlling all of government, they can do big things. And if it were the Republicans, maybe tax cuts. If it were the Democrats, maybe more spending on energy transition. But that's something that could potentially disrupt the outlook for treasuries. However, that scenario where you have single party control is actually not likely, but of course could happen. Since over the last couple of months, of course, it's been just the opposite, this just very dramatic, very swift rally in treasuries. I think we all understand a bit better why that's happened. This view of the market that inflation's no longer a worry, and therefore the central banks, the ECB, the Fed, will be cutting soon. So we need to look and think about that view that inflation is going to be quite so benign. This chart shows you the evolution of inflation over the last year. We'll start with the third group of bars where it says US core CPI. And you can see the yearly change has been decelerating. One thing that surprised me, though, about this big rally over the last couple months is if you look at the last two bars, which show the most recent data for core CPI, you can see it really isn't that much better than the data we had previously. And if anything, it shows a somewhat slower deceleration in inflation. And hence a bit puzzling that the market seems to think the data that we're getting on inflation in the US is so positive and so encouraging. And hence some of our caution about the outlook that the market has swung perhaps too far in the other direction. Where there has been really good news has been more in the Eurozone. Again, if you look at core inflation for the Eurozone, it had been stagnant at a high level for quite a long time. Really properly stagflation, where you had stagnant growth but still high inflation. But now, as we see over the last 3 months, we're seeing a much sharper deceleration in inflation in Europe. That's clearly very good and raises the possibility that the ECB actually cuts policy rates before the Fed. Maybe one other point on inflation, and again, some of the risks perhaps that we have ahead of us. One, we appreciate because of the pandemic that labor markets don't quite work the way they used to. It seems to be much harder generally to find workers, hence salaries have had to go up, and that's led to an increase in services inflation. And for example, the dark blue line here shows average hourly earnings in the US. Besides the effect of the pandemic on the labor market, perhaps leading to higher inflation in the future, there I'd say at least two other factors that make us believe we probably are living in a higher inflation world than we did before the pandemic. So number one, as I mentioned, labor markets. Number two, deglobalization. If we're producing more domestically, less in China, kind of by definition, that's more expensive. And then also the energy transition is probably somewhat inflationary in the short term. We're investing a lot, trying to build a lot of renewable energy capacity now, but that's pushing up prices, pushing up demand. While at the same time we're investing less in fossil fuels, even though, needless to say, we're still using them for now. All these things suggesting that this deceleration we've had in inflation over the last year could stop at some point, or at least pause, maybe is the better word. I don't know, 3%, 2.5%, but then it stops going down towards the 2% that the Fed wants. And if that happens, the Fed won't be able to cut interest rates as quickly as the market expects, and that could be one of the less pleasant surprises for next year. On the positive side, if we think about that soft landing narrative, which is about no recession in the US, even as inflation decelerates, we are more confident about the outlook for US growth for two reasons. We know in the third quarter for the US, growth was extremely strong, 5%, which when you think about it is really amazing. I mean, you've had an extremely high growth rate for the US after the Fed has raised interest rates 525 basis points. I mean, really, that's not the way it's supposed to work. You raise interest rates, growth's supposed to go down. It's gone up. But of course, it's been a very strange 4 years. It's not just the pandemic. Sadly, pandemics do occur. But what was so unusual about what we've had over the last 4 years is we had a global pandemic. with global lockdowns and then reopenings and trillions of dollars of fiscal and monetary policy stimulus. And that combination has never, ever occurred. And that actually explains why we have all generally done such a poor job of predicting growth and inflation over the last couple years. I mean, the Fed was always behind or too low in its expectations of inflation when it was going up, now also behind as inflation comes down. But frankly, that's quite understandable, given that we have no historical precedent to look at to tell us how things might go this time. I mentioned that those trillions of dollars in fiscal stimulus, and of course that's one of the key reasons that that first bar in the chart, personal consumption expenditures or consumer demand, has been so strong, and we think will continue to be strong. Our estimate is that the excess savings that people still have, thanks to government support, will not run out until the end of next year. So ongoing strong consumer demand. The other very important driver, though, of GDP growth, however, is business investment. And you can see, in fact, in the third quarter, business investment only contributed 0.2% to GDP growth, which is actually very little. It's also quite surprising because we also had, of course, the Inflation Reduction Act in the US. And the whole point of that legislation was to promote business investment in renewable energy and in semiconductors, but this suggests it's not working. And it's even more puzzling because in the previous quarter, you actually did have a strong increase in business investment. It's important then to understand what's happening because that is potentially a very important factor for next year. The good news is if you look at the detail for business investment in the US, you see, in fact, it was quite good. There was quite strong investment in software. Everyone's investing in AI. That's what you would expect. There was strong growth in manufacturing. That's that investment in semiconductors and electric vehicle charging stations and everything around renewable energy. The reason the headline figure was low was because, number one, there was less investment in mining, exploration, oil shafts, and oil wells, which, of course, is exactly what we want. We want to invest more in renewable energy and less in fossil fuels, and that's what happened. There was also, maybe a little bit less encouraging, less investment in computer equipment, but you can see that that's quite a volatile series. Hence, we're more optimistic that next year business investment still should be pretty good, consumer demand still pretty good, and hence good growth for the US next year. Now, that's a bit in contrast to Europe, where even if the US is growing at 5%, Europe is growing or probably is in a recession currently. This table shows you the purchasing manager indices for a lot of countries. As you know, if the number is below 50, that's contraction. Above 50 is expansion. And for most of Europe, you can see for several months now, all the numbers, or most of the numbers, have been below 50. And that's why we think Europe today is probably in a recession. And that was also part of the puzzlement about the high inflation you had in Europe. You know, if Europe was in a recession, how could inflation stay so high? But it now is coming down. However, there may be another very important factor about why inflation has been stickier in Europe than in the US, and that's the labor market. I mentioned already how one of the consequences of the pandemic is it still seems quite difficult to find people to do some jobs. That's generally pushed up wages. But an additional factor in Europe is there's also a much higher level of labor market unionization in Europe. And you have a lot of unions going on strike in Europe saying they would like higher salaries because inflation's so high. Perfectly reasonable thing to want. They've been fortunate to actually get a lot of those wage gains. and hence you see more wage pressure in Europe than you necessarily do in the US, despite the fact that you have this weak growth. Nonetheless, we are seeing inflation coming down, still the risk that it doesn't go all the way back down. Another key difference next year versus this year, however, will be the dynamics of growth. Europe should be recovering next year. I mean, growth still is not going to be very strong, but from the fourth quarter, we should be improving, while the US will be decelerating. And that certainly is going to have an impact on the markets next year, different from what we've had this year. Generally, then, the outlook for Europe, not particularly positive. Again, improving growth, but still fairly weak. And a lot of those structural challenges, particularly in Germany, that we're aware of, needless to say, not going to disappear in the next couple quarters. The other big question mark, and probably still the biggest question mark, is around China. If we look first, though, at emerging markets more broadly, almost there. Oh, stop. Okay. These, again, are the purchasing manager indices for emerging markets. If I look at Turkey here, so that's 1, 2, 3, 4. I try to bring good news. I can't change the numbers. Unfortunately, the PMIs for Turkey haven't been so great recently, and was a bit worse, unfortunately, in November. More broadly, as always, emerging markets, it depends. There's so much variation. The challenge for emerging, or at least some emerging markets, and particularly those that have large budget deficits or large current account deficits, is that financing those deficits clearly more difficult now with higher U.S. Treasury yields. I mean, clearly they've fallen, but still 4% is a lot more than it has been in the past. The positive news is, because you didn't have the same because you didn't have the same fiscal stimulus in most emerging markets like you had in the US and Europe, you also don't have the same inflationary pressures. And that's allowed the central banks to begin cutting rates potentially even more quickly than the Fed. So difficulties because of Treasury yields, but perhaps more supportive monetary policy. I mentioned China, though, and if the U.S. was the big positive surprise this year, I think it's safe to say that China's been the big negative surprise. All of us, most of us, assuming that after 3 years of lockdown, that when China finally reopened, it just should be this massive recovery, and that clearly has not happened. I think two key reasons for that. One, generally, the Chinese government did not provide the fiscal support to households during the lockdowns the way you saw in the US and Europe. Meaning when the lockdowns ended, people didn't have a lot of money that they felt they could go spend. In addition, the fact that the lockdown was so long, 3 years, the damage to the economy was arguably much greater than at least what you had in Europe and the US, where the lockdowns were of relatively short duration, just a few months. That's a key reason China is still struggling. Of course, there's the long-going issues that we're aware of in the property market. For all that, though, we also expected the government to have done much more to support economic growth, much more stimulus. And they have not. And they may not to the degree we would like to see. We do anticipate more support next year, but not massive support, and hence there is the risk that, from a foreign investor point of view, arguably the negative sentiment that seems to be there towards China could persist. Even if you look at the equity market, there seems to be a lot of potential. Whether that potential is realized clearly remains to be seen. Let's talk about equities then. Normally, the three things we want to think about for equities are interest rates, valuations, and earnings. Again, start with interest rates. Over the last 2 years, really the most important factor. That's unusual because of the extreme volatility. Hopefully less volatility now, and hence not such a key driver for returns over the next year. We'll look at valuations in a moment, but I can say broadly they're fairly neutral, average, and also shouldn't be a big driver for returns. And that means, as I said at the very beginning, the most important thing should be earnings. And we want to assess then what we think the outlook is for earnings next year. The chart here shows you consensus earnings growth estimates, what the market expects earnings growth to be next year. Of course, it's wrong. These are just estimates. But it's a good starting point to see if we agree or disagree. Do we think it'll be better or will it be worse? We start with the US. And in general, I would encourage you, when you look at US equities, do not look at the S&P 500. Because I think when you look at the S&P 500, you mix everything up. And what I mean is the US equity market is really two different markets. There's the tech part of the market. Here I'm representing that by the NASDAQ 100. And then there's the rest of the market, which I'm representing by the Russell Value Index, which is much more like the European equity market or the Japanese equity market. Meaning if you look at it this way, I think you're better able to compare global markets with Russell Value because they're similar markets. And also then you have a distinct focus on the tech sector, which is, I think, unique in the US. There's no other market like it. And you can see that here. Expectation 17% earnings growth for NASDAQ next year. It's pretty good. In general, when I think about NASDAQ, I really almost never worry about or think much about their earnings outlook. It's going to be good. Earnings growth in this sector, it's going to grow faster than anything else. What I do worry about is valuations, but not so much earnings. For the other markets, yes, earnings. We see 9% for Russell Value, still pretty good. 6% for Europe, not so much. 8% Japan, again, okay. And then 15% for China. And if you have 15% earnings growth in China, I think we all appreciate valuations are much lower now than they were. You should have good returns for Chinese equities, but to be honest, that's been the case for most of this year, and that's not happened. As I said, clearly potential in Chinese equities, but whether that actually is realized, we'll see. This chart shows you the performance of the different indices. Again, I've separated for the US NASDAQ from the Russell Value. Again, to illustrate the same point in a slightly different way. We've all heard this commentary that for US equities, at least, it's all been about the Magnificent Seven. That other than the 7 stocks, the rest of the market hasn't done anything. And I think this chart says that that's not true. If you look at the performance of the Russell Value, the purple line, you can see it's actually done reasonably well most of the year. It's actually underperformed Europe and small cap, but still, you've had positive returns. And again, to illustrate why I think it's important to look at it this way, to think about the earnings dynamic, to look at the valuations between the two different indices because they're quite different. On emerging markets, this shows you the year-to-date returns for the different markets. You'll notice at the top, Taiwan and Korea are two of the best, not coincidentally very tech-oriented markets. And this also illustrates my point that it's not just the Magnificent Seven. I think there's been a global tech factor that's done well this year, which normally would also have meant China would do well, except we've had other issues with China. And I would anticipate that globally tech should continue to do well. You can see India. People wonder, is India the next China? I'm probably a bit more skeptical, but clearly it's done this well. And as I'm sure you're aware, Turkish equities flat for the year, but hopefully better next year. So let's turn a bit to fixed income and some other asset classes. Again, really the key issue today probably are these expectations that we have priced in the market for Fed cuts after the last meeting, the latest dot plot, and what was interpreted as very dovish commentary from the Fed. The green line is the latest dot plot from the Fed, what the Fed projects interest rates will be. They have interest rates at 3.5 by the end of the year. The market has an additional 2 cuts on top of that. Again, we're skeptical that it will be that much. We're probably more aligned with what the Fed is saying than what the markets believe. So that potential that rates move back up as, again, inflation doesn't come down so quickly, or maybe growth remains too strong. On the other hand, maybe a bit more sympathetic to the view for the Eurozone, given that generally we see that potential for rates to continue to fall. In terms of asset allocation, our primary overweights are to U.S. real yields, or TIPS. In addition to that, in Europe, we also like corporate credit, investment-grade corporate credit. The reason for that is if you look at the light blue line here, which shows you the Z-score for spreads, meaning it indicates whether spreads for credit are above or below average. And you can see the light blue line for Eurozone investment-grade credit is the highest one, meaning spreads are above historical averages for Eurozone credit, i.e. you're getting compensated for whatever risk you're taking. And we think the risk for Eurozone IG credit is relatively low today. Balance sheets are healthy, they've refinanced at low interest rates, and we're not concerned about the outlook, and in the meantime, spreads are good. In contrast, US high yield, spreads well below average, slowing economy, low spreads, we find that to be less attractive. Also, I think like most people, negative on the outlook for the dollar. Slowing growth in the US, the Fed cutting rates, maybe a question, who cuts first, who cuts most between the Fed and the ECB, but generally anticipate the dollar weakening, and particularly weakening the most against the yen, because at the same time the Bank of Japan having to tighten interest rates when everyone else is weakening, which is actually probably the key risk then for Japanese equities. Hopefully we have entrenched inflation in Japan, the earnings outlook looks good, but if the yen appreciates, that tends to lead to underperformance for Japanese equities, and that's certainly for us the key risk in the market. Neutral on commodities generally, on one hand, weakish growth, but on the other hand, as I mentioned, with energy transition, disinvestment in fossil fuels, and hence support for prices. So some things weakening prices, some things supporting prices, hence we're neutral. That said, we would anticipate perhaps a bit more support for gold prices, given that the dollar is weakening. Generally an environment where that supports the dollar. So broadly from that point of view, perhaps gold does a bit better. If I can summarize then, macro outlook, much better than a recession. Soft landing's a good thing, but it's not going to necessarily be an easy thing. Again, on the margin, most of the economic data we're going to have, at least over the next 6 months, is going to be worse. And the market, I don't think, is always going to be happy with negative and weakening economic data. So that's one key risk on the growth side. The other key risk on the inflation side is that inflation doesn't fall so quickly, and the Fed in particular cannot cut rates so far and so quickly. So generally benign-ish, positive-ish outlook, but not fantastic. More concerns for Europe, at best a weak recovery, and then a big question mark about what the Chinese government ultimately decides to do. but at this point more cautious about the prospect of bigger stimulus from China. In that environment, we're neutral on equities broadly. I think that reflects this view that's positive but not great. You don't expect above average returns for equities, hence you're not overweight, but it's not a recession, so you're not underweight, hence you end up around neutral. We're most cautious on European equities. And then finally, fixed income, we've come a long ways. I mean, frankly, we're probably now at levels for 10-year treasuries we thought we would be not until the end of next year. So at this point, other than your typical volatility, maybe yields stay around 4%. So that's going to be a positive carry. We see the most potential in TIPS and real yields in the US, and in Eurozone investment grade credit and local currency emerging market debt. And with that, I think my time is up. Again, thank you very, very much, and I wish you all the most luck investing in 2024. Thank you.
Thank you.